Good morning.
Canadian dollar gains as U.S. dollar pressure eases. Scotiabank. Silver gains momentum on geopolitical tensions. Weaker U.S. dollar. U.S. dollar. Markets rattled as Fed receives grand jury subpoenas. Scotiabank. Germany current account NDSA rose from previous 14.8B to 15.1B in November. Ripple price forecast. XRP risks sliding below $2 as steady ETF inflows fail to lift sentiment. Oil prices consolidate after gains. Iran protests. Venezuela supply in focus.
Companies scramble to secure ships, assemble operations to transfer Venezuelan oil. Sources say U.S. dollar yen price forecast 158 Ost caps upside as the pair consolidates near January 2025 highs.
Euro strengthens amid broad U.S. dollar weakness. Scotiabank. Gold prices hit record high on Iran. Unrest, Fed indictment threat.
Oil dips as investors assess Iran supply, Venezuelan export resumption. Pound sentiment drives pound higher ahead of Bank of England speeches. Scotiabank. Yo, I gotta reload my coffee. Where's my coffee mug? 17 seconds, baby. Ah, such good timing. G'day, mate. How are ya? Hello, hello, hello. Yeah, the silver market's cray-cray, Hope. So let's get on with it. Hey, welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Let's go. Bum, ba, ba, ba. Forex.Today is a partnership between TRADARS and Traders Way. If you need a broker, the fantastic execution, Traders Way is trustworthy and ethical. Let's go. Let me remind you that trading is risky. It's not appropriate for everyone. Oh, no. Your past performance, good or bad, is not necessarily indicative of future results.
Yen lags G10 despite broad US dollar weakness. Scotiabank.
Please stay small, stay humble. Focus on the long term. And never risk money you cannot afford to lose. So what's going on in the world, everybody? You doing all right? Well, look at what happened. We had a little thing called non-farm payrolls. Dropped and then spiked, euro dollar. And I'm like, oh man, that doesn't make any sense. The spike part doesn't make any sense. Because what we saw at the Fed would probably tell them to not cut interest rates and blah, 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 blah. So I thought down. So it went all the way back down. And in fact, we did basically the full Monty, where we went from our sell target, our sell entry, right, to our take profit entry. Look at bearish profit zone aggressive. We had that all laid out the day before. Yeah. And then what? Holy schnicker-schnacker. Holy schnicker-schnacker. Guess what? Well, Jay Powell might be thrown in jail and into prison. He'll be cracking rocks with a hammer, or so the threat goes. And that threat is not just against Jay Powell, but really the independence of the entire Fed. Criminal subpoenas. Just extraordinary. And so now we're in or at least since the news came out, we've been in this dollar weakness phase. Yeah. And here we is now. So one of the things we kind of have to do, at least on this time frame, is change the pivots. Because that is not bearish. That chart, there's nothing on that chart that's bearish. Second thing you want to do is identify role reversals. And then look at tomorrow's targets. Now you can go out to weekly targets, but your weekly targets may have been busted already based on, fairly extraordinary news. Now, also just for the sake of thoroughness, I want to mark that as buy a dip area. And that's kind of how you do things technically. Kind of interesting, huh? So what would you guys like me to cover today? Let me know in the chat. Don't forget to like. That would be nice. Tell YouTube this is good. We're 8 hours away from the next piece of news, so don't worry about it. Forget about it. And Australian consumer confidence. But tomorrow it gets interesting. ADP weekly. US CPI, which is normal this time of month, but I always think of it on a Wednesday, not a Tuesday. Right? Kind of did a wait what? Or a Scooby? Scoob? Metals. Where there's hope, there's a strategy. Yeah, for sure we can do metals. So anyways, we got our CPI, and you can do all your variations of CPI, core, non-core, blah, blah, blah. But we track all of that, of course. But we also now have a real estate function under fundamentals, because we want to look at new home sales, which are skyrocketing, existing home sales, which are not skyrocketing, and fit that into the puzzle of GDP. Yeah. Because real estate is important for GDP. Also, in that we look at mortgage rates, and mortgage rates are tied to Fed funds rates. And, there's relationships between all of these things. Let's get an update on the news. Hang on, let me just kick the server.
Yen lags G10 despite broad U.S. dollar weakness. Scotiabank.
Pound sentiment drives pound higher ahead of Bank of England speeches. Scotiabank. Oil dips as investors assess Iran supply. Venezuelan export resumption.
Euro strengthens amid broad U.S. dollar weakness. Scotiabank. Gold prices hit record high on Iran. Unrest, Fed indictment threat. Canadian dollar gains as U.S. dollar pressure eases. Scotiabank. Silver gains momentum on geopolitical tensions. Weaker U.S. dollar. U.S. dollar. Markets rattled as Fed receives grand jury subpoenas. Scotiabank.
So anywho, yeah. Loading. It's been a lot of upgrades over the weekend, which means there's a lot of things that are working 90% instead of 100. Because the more you fix, the more you break things, huh? So I'm in there. If it ain't broken, don't fix it. Yeah, but I'm fixing, quote unquote. I'm updating. I'm adding new features and benefits, and when you add that, you add this here and you break that there. I got business cards stuck in my laser. Oh, yeah. Okay, so as a reminder, maybe you're not familiar with this, but these are day trades. We're looking at price relative to the last trading day. So you want to see movers. And then, of course, you can zoom in, and there's your silver. If you prefer to be a swing trader, no, that button doesn't work. You can switch things out. And I like swing trading. I think has been my favorite now for a few years, because instead of scalping, which is great, where you're looking at things that will just change over the next couple of hours, swing trading is two couple of days to a couple of weeks. I like that a lot. And when you zip over to Position Trader, which is here on the market radar as well, that's really, the next month or two, or this kind of like this quarter, that kind of thing. We care about monthly pivots and annual pivots and all that kind of stuff. And to me, this is a beautiful little sweet spot. And in here you see we got yield curve and commodities and Forex and crypto. We cover a lot more crypto assets than last week. There's, like I said, a lot of upgrades. And well, we got the prices. I don't think it's calculated. Maybe only because it doesn't have 7 days worth of prices. I think that's what it is. But we have crypto. We have the entire yield curve in the United States, huh? 1 month, 3 month, 1 year, 2 year, 5 year, 10 year, 20 year, and 30 year. Kind of cool, right? Yeah, very cool. In fact, I think. And there's your silver and gold. Look at that, 4,600. Whoa, it's so good, right? Yeah. That's glitching on calculating the 7 day. I know what's doing that. That's right. I got a heads up about that. So it was failing on storing the price of gold 7 days ago relative to the current price. And because of that, it's not able to calculate the relative change since last week. That's why it's 0.0. I already know the glitch there. But oil's down, gold is up, silver's up, and gold is up like 5%. Yeah, like hardcore. Cool. We're missing some internationals. We shouldn't be, though. Maybe they're just not loading. We shouldn't be. If not, I already have started the process of ensuring that we get those. Cool. Hey, by the way, everything you've seen so far is part of the free subscription at TRADARS.com. So when you begin your trading session, you should always make sure you have sort of your strategic plan aligned up with current reality. Meaning you could be a very, let's say you're very bullish on the stock market and you're like, I'm way long AI. Sweet. Right on. I don't disagree with that, whatever, at all. But does that mean the stock market's going to be up today or this week or this month or even this quarter? Because when you look at seasonality, right, there's time for sun and there's time for rain. There's time for snow. Yeah, of course, Hope. Yeah, we're getting there. Dude, Hope. Hey, dude. Hope. It's like the technical chart is like the easiest part of this whole thing. Right? Like, for example, let's say we're bulls, right? Buy a dip. You're like, well, how do you define a dip? Well, pick your time frame. You can use an oscillator, moving average. You can use price action. You can use Fibonacci. You can use Elliott wave. It's all the same, right? So, and I know you know how to do all that. But like the most important thing right now is actually what is going to happen in the next couple of days, meaning this is risk off. So typically dollar would gain strength, gold would come down. But today is risk off for a very unique reason. The threat of Fed independence, de-dollarization, the end of the reserve currency regime. And we have risk off right now and a strong dollar. No, joking. Risk off and a weak dollar. Now that's unusual. But we want to move away from debating of, you remember how I used to ask everybody, hey, what are you trading today? Risk on or risk off? Well, there should be no debate if you simply look at dozens and dozens and dozens and dozens and dozens of variables. You're a negative 0.27 right now. Right now. This changes, I think every 15 minutes we redo this calculation. Like right now. It wasn't negative 2.7 earlier today. It wasn't negative 2.7 on Friday or Thursday. And in fact, at the end of December, we're very bullish. And now we've been bearish to neutral, and now there's an acceleration to the bearishness. So you would just assume, based on the correlation matrix, boom, dollar's going to get strong. But it's not. That's interesting. That's totally. But at least you know it's risk off. Okay. Now, I've added this. It's pretty good. There's a couple of prices that are not pulling properly, but I'll get to it. But I'm calling this now the contrarian radar. And this used to be a paid premium tool. I moved it over the weekend based on a promise I made at non-farm payrolls. I think it's so important, everybody should have it. So I've moved it to the free part of the application. So now this is available to everyone. And the reason I call it a contrarian, it's a scatter plot. And you're like, well, Wayne, what is a scatter plot? Oh, it's a statistical analysis of the long-term and short-term. I'm not good at math. Hey, don't worry about it. Neither am I. But what does contrarian mean? Well, you're looking for dips in an uptrend. You're looking for dips in a down or rips in a downtrend. You want to see contrarian setups. And I'm like, okay, that's what this does. So vertical, whether positive or negative, is showing you what price is doing right now. Price, just now. Price. Okay, so we're only looking at this. So everything below this zero line is negative right now, today. Everything above that is positive. It's up in price today, right now. These scores at the bottom are basically our fundamental score. Okay? Like lots of details go into that. Not a lot from the charts, but things like macroeconomics, commitment of traders reports, seasonality, a whole bunch of interesting stuff. Lots and lots and lots of variables. And very few with what's happening right this second. So we have long-term, and now on these axes, okay? Cool. So this is why it's contrarian. So if something was up today, but we were bearish, it would be over here. Okay? Bullish, unexpected. Those are contrarian. Bearish, unexpected. That is also contrarian. Cool. And then, of course, you can zoom in and muck around with this. The front end is glitching right now from the last update. I might have accidentally cut the update off too quickly. So I'm gonna give it a little something something. Oh yeah, and this is gonna glitch on. Hang on. Let's see if this is gonna glitch on us too. Let's see if I can update this. Hang on. You're gonna say, Wayne, it looks fine. Yeah, but this window's gonna glitch. Yeah. All right. I just didn't have time. Let me check the back end. Give me a minute. Come on, man. Give me a minute. Gold surges past $4,600 as Fed turmoil and global tensions lift safe haven demand. U.S. dollar index pulls back as Powell probe revives Fed independence concerns. Consumer defensive gains. Walmart and defense stocks lead the charge.
U.S. stocks open lower on renewed attack against Fed independence. Yen lags G10 despite broad U.S. dollar weakness. Scotiabank.
Pound sentiment drives pound higher ahead of Bank of England speeches. Scotiabank. Oil dips as investors assess Iran supply. Venezuelan export resumption.
Euro strengthens amid broad U.S. dollar weakness. Scotiabank.
It's so good to have a squawk box, isn't it? It's just so good. Hey, trader, have you heard the news? All right. Let's see if I refresh this page, if that did anything. If not, I have the coding in process. And we'll just move on. But, and that's a big but, let it load again. There's a new iteration. I don't know. I don't know if it's going to fix the glitch. But it's a front end rendering. It's not a back end thing. It's literally drawing of the chart that is glitching right now. Yes. No, it's still gold surges past $4,600 as Fed turmoil and global tensions lift safe haven demand. U.S. dollar index pulls back as Powell probe revives Fed independence concerns. Consumer defensive gains. Walmart and defense stocks lead the charge.
U.S. stocks open lower on renewed attack against Fed independence. Yen lags G10 despite broad U.S. dollar weakness.
Oh, I know what
Scotiabank.
it did. Pound sentiment drives pound higher ahead of Bank of England speeches. Scotiabank. Oil dips as investors assess Iran supply. Venezuelan export resumption.
Euro strengthens amid broad U.S. dollar weakness. Scotiabank.
I don't know where that second squawk box was coming from, but anyways. So let me explain this. It's just struggling to render the price history. And so we're fixing that right now. In fact, I can probably check it on the back end. But over the weekend, I simply added some colors to this. And it's really nice because now you can clearly see uptrends are green and red trends or downtrends are red. And what you're ideally doing is looking for a dip. Okay. No QuantBox should be out of service. Are you able to get into QuantBox, Greg? Because QuantBox became TRADARS like a year and a half ago. And people that are subscribed to TRADARS from the old days, they have access. QuantBox in the old days have access to TRADARS. So you should be able to log in if you're old school QuantBox. You should be using this. It's next generation. This is all based on artificial intelligence and not algorithm. Yeah. So anyways, check it out, because what we're trying to do is similar to the scatter plot. Remember, the scatter plot is long-term versus right now. The right now doesn't describe medium term. You're like, wait, what? Well, that's the trick with trading and investing. Short term, medium, long term, best case, base case, worst case. So this is helping you put that puzzle together where you're looking at, in this case, US dollar, and you're looking at the longer term trend defined statistically. Yeah, we'll come to our daily meetings at TRADARS, Greg. Okay, so long-term trends statistically, not fundamentally, not personal bias or assumptions. It's mathematics. They're going back by definition of swing trading, which is days to weeks. This is bullish, full stop. May not line up with your opinion, but this is statistical analysis, mathematics. Same thing with day trades. No matter what you think or how you feel or what you want or need, according to our analysis going back several days, the day trade trend is bullish, full stop. And then intraday, what we call scalp, is statistically bearish. This is important because based on the principles of technical analysis, which is just different algorithms to try to do price action. What's price action? If it's an uptrend, you buy a dip. It's not going to make a lower low. Okay, it goes up, and then you buy a dip. It's not going to make a lower low, and so on and so forth. So you can use any tool you want, MACD, pivot points, Fibonacci, Elliott wave, RSI, PPI, MACD, ADX. Doesn't matter. If you can't buy a dip in an uptrend, you don't know how to trade. Doesn't matter what tool you use. Okay? As Michael Jackson would say, you're just ignorant. You're just ignorant. Okay? But if you know how to trade, you've picked the tools you like to learn how to buy a dip. Cool. So what does this say? Long term up, medium term up, short term down. That is what we define as a dip. Now, this is not doing technical analysis. It's not looking at pivot points and stuff. It's not fundamental analysis. It's not telling you what should. It's just telling you what is happening. Now, we know today the dollar's weak based on this threat to Fed independence. But if you're going to do just old school classic technical analysis, this up leads to a down, which should lead to a new up. Okay. Now, I'll fix the glitch on the price. In fact, maybe I've already done it. Disable render. Wait, I think they got rid of our cool animation. I like our cool animation. Hang on. Aiden was fixing it while we were talking. But anyway, so I thought the colors, let me get back to what I was trying to say. I think the colors are helpful. I mean, on Friday, the colors were just grayscale. But now you see green and red. Come on, dude. I didn't know the whole site was going to reload. All right, there we go. Maybe that's a good sign. I think it just turned the animation off instead of fixing the problem. Uh-huh. Remember, guys and gals, I think artificial intelligence is quite scary because it's like a genius 5-year-old. It's wicked smart, but it's wicked dumb. All right, let's see what it did. And of course, it didn't do anything. Great. Well, so I'll get to it. I'll get that fixed up. But I hope you like. I hope you like. You know what we're doing here. You're like, I only want to focus on dollar pairs today, Wayne. Well, that makes sense to me because the dollar's ripper weak based on today's threat, right? The indictments of Fed officials. Yeah, okay, that makes sense. If we were lacking macro trend, okay, then I would move to cross pairs. And that's not loading, but we do have Swissy pairs and yen pairs and dollar. We have crypto, we have stock indices, and we're lacking commodities. Okay, so I'll get all that fixed. So you want to use these tools together, contrarian and trend. You see? Looking for dips, looking for dips. And we're doing this on multiple time frames, and we're removing opinion. Isn't that cool? Now you might have an opinion and say, well, I want Bitcoin down. Okay. That could be your opinion. And I'm sure you can explain to me. Oh, it's interesting. No, this doesn't work. His fix was to kill the charts. Come on, Eden. Well, I mean, it's smart, isn't it? Oh, the charts are glitchy? Let me fix that. What did you do? I killed all the charts. Anyways, what I was going to do is I open these charts, but it doesn't matter. If you think or want or believe or have the opinion of or the bias of Bitcoin is going down, it's not for me to argue with you or against you, for you or not for you. Well, right, so monitors is this actually work? This is macroeconomic data and statistical analysis and technical analysis from a large language model that I've personally built. I mean, work? What do you mean, does it actually work? This is fact, not opinion. Okay. Now, when you say you're confused, let me know. Oops. And there we go. But what I was trying to show here was you might be a bear, but it's not bearish. And that's very useful information. And that would be saying, well, you'd be contrarian because in that moment, that is a fact, not Wayne's opinion. Okay? And most of these pages have the mathematics at the bottom of the page, and an overview of the methodology, and the macroeconomics or the mathematics or whatever we're doing go in there, right? So one of the reasons there might be some glitchiness going on today on it's mostly the front end, meaning the back end databases and AI. It's all there. But I made so many changes over the weekend that some things are a little glitchy on the front end. One of the major things that we did was have multiple specialized pricing aggregators, I guess you would call it, to get highly specialized, highly detailed pricing. Okay. And so now we have all these new data feeds coming in. So we're connected to at least, it's more than, but at least 15 government agencies pulling in macro data. So imagine now, like the Bureau of Labor Statistics brings in job stuff, Census Bureau brings in like real estate stuff, and like each government agency, the ONS brings in macroeconomic macroeconomic data for the Great British Pound. Like each of these are direct sources, and I'm trying to get to the closest direct source for commodities and crypto and Forex and stock indices and treasuries, that kind of stuff. And so now we have multiple price feeds that I just built over the weekend. And then now that the prices are coming in, we have to then build it into all these other tools that say, what's the price now? What's the price now? What's the price now? What's the price now? What was the price yesterday? What was the price 7 days ago? What was the price 30 days ago? What is the change in price over the 7 and 30 days, right? That kind of stuff. And we may have missed a couple. So if you spot a little bit of glitchiness, it'll all be ironed out. But we're still pretty hot to go, HOTTOGO on gold. Okay. COT report, the Commitment of Traders report. Here's your little overview. What we're doing here, again, is comparing long-term with short-term. What's been happening over the long term? What happened over the last week? You guys remember my book, Strategic and Tactical Forex Trading? The whole point is to line up, right, long-term trends with short-term price action. Or probably the other way around. Short-term price action with long-term trends, right? The long-term versus the short-term. Markets versus price. And then you're like, wait, you're analyzing contrarian and trends on 3 time frames, long, medium, and short. Yeah, long-term aligned with short-term. Well, what about institutional positioning? Yes, long-term, short-term. Now, over the weekend, it was discovered by us that the CFTC has decided to change the formatting of only their financial data. And so now I'm looking at a lot of this stuff and I have severe doubts, if not complete surety that this stuff is wrong. Not us. It's not us. We're not making a mistake. The government, without warning, just changed how they do their data, but not on all the commitment of trader reports, just on some, because commodities are not in the financial section, and the financial section isn't with the stock indices, right? Or the commodities are not with stock indices and all this stuff. It's really, the government makes it really confusing. They could just analyze everything and just have one format for everything. And then if they were going to change the format, they would probably should tell people ahead of time that they're going to do it. But none of this is true at the U.S. government, so they glitched basically us out. So I will have to go back, look at their new formatting of their report, and then reteach Aiden, or AI, how to do it. And so, for example, if you go to this is what they changed over the week. Okay, it's slightly different from what we've had for years. Can you spot why? Neither can I. So I'm going to actually have to really, really focus on this to see why we've calculated this, because I think they've changed where they put the numbers or how they put the numbers, or maybe changed the tables, or something is different. And I think some of these things should be like gold. I think we're long gold. I mean, I can get the data here. Canadian dollar, Swiss franc, British pound, Japanese yen, Euro FX, Mexican peso, Kiwi dollar, Dow Jones, E-minis, S&P 500 consolidated, S&P 500 minis. See, all this data is here. It's crazy, right? Can you imagine? I used to spend a whole day going through this report. Okay. And if you've never done that, notice that I'm looking at like NASDAQ minis, but the long and the short for dealers, asset managers, hedge funds, other big non-hedging reportables, and then retail position. Okay. It's cool, right? And from that, we can tell how people are positioned, which is really good. And then you're like, wait, I don't see any gold on here, Wayne. Okay. I see treasuries. I see NASDAQ E-minis, and I see some Forex. Yeah, you got to go to a different report. So I'll work on it. It's good. I mean, but here's how we grab that data. The most important thing is we actually turn this into this, which is nice, huh? Yeah, it took out all the animation. I'm gonna have to don't hide it, fix it. But pretty cool stuff, because I'd rather look at this than those, those other ones. Just want to check this. And then we'll do some technicals. You guys want to do some technicals? Yeah. Don't forget, we're going to do some silver. 58.84 on WTI. Yeah, that's right. Cool. Down $2 in the last 30 days. U.S. inventories are stable. Global GDP projected. U.S. rig count dropped by 2 over the weekend. Now it says Canadian rig count jumped 96 wells. That seems highly unlikely. So I'll figure out what the glitch is here. But it's good to have. Tomorrow we have API inventories. Yeah, that's a lot. Yeah, you're like, -2 is a lot. Plus 96 is a lot times a lot times a lot times a lot. Yeah. But we have our calendar here for those that trade energy. Cool. And we're still projecting down for a while, even though we're up to 58. We were 60 a month ago. And I think we're 70 2 months ago. So the question is, are we going to be below 50 in a month from now? Okay, this makes a lot more sense. Okay, notice it's better data. So maybe I was glitching there, and I was thinking, well, maybe we should move this data up to the top and all this stuff. But check this out. This is better data. The United States has 544 rigs. We lost 2 week over week, but we're down 40 year over year. Canada has 197. Oh, no, that same glitch is there. Okay. Down 19 from a year ago, but up 100 this week. Okay. That is right out. And then globally, okay, 1,806. We're increasing our production. In particular, OPEC is increasing production. And I have to flesh that out a little bit. This, I'm trying to draw a line. I haven't worked on this for a while, but I'm trying to get this data here to draw the historic line of where we are relative to the 5-year seasonal average. Which is actually quite cool. It just doesn't want to do it. How many people here are going to use the energy radar? This is us projecting demand, okay? Demand for energy into the future. And this is us analyzing supply now, historically, and into the future. This is full supply and demand. We're hooked up to API, EIA, OPEC. You're like, wait, what? You're hooked up? I am hooked up to the OPEC database. We're hooked up into the COT report. We're grabbing Baker Hughes. This is legit. I'm hooked up to the OECD and into IMF and to the IMF. So there, what is that? 8 government agencies I'm hooked up to just for this oil analysis. And that's just data. So once you have the data, then you have to understand it, analyze it, and then use it to make future projections like, yeah, we're dropping to 50 and potentially lower. Yeah. So 2 people. That's it, really. Or 3 people. Really? You guys don't trade oil? Oil's, especially if you're a scalper, man. I love scalping oil. Huh. Well, let me ask a different question then. Would anybody like this type of analysis for gold? I am trying to get data on central banking purchases. For example, I found where you can find that from the Fed, how much buying and selling directly from the Fed. But I think I can get that for several other major economies, like how much gold is Russia buying? How much gold is China buying? How much gold is Japan buying? That kind of stuff. And we can get a picture there. I'd like to find ways to get historical and current purchases by retail, like jewelry, maybe the dentist industry. We need to be able to track production by gold mines. So I need to find out where to get that data, because you want to see not just current demand, and maybe try to understand current demand by levels of inflation or de-dollarization or whatever's going on there. Because there could be aggregate demand, which is good because the economy is good, or there could be sort of financial demand, if you'd call it that, based on disbelief in a currency, or a central bank trying to weaken their currency by buying gold. You see, or they decide instead of holding the reserve currency, which is dollar, in their vault, they would rather hold gold in their vault. So it'd be cool to okay, there's that demand side, but we still need supply side. Now, supply is fairly steady. I think we add less than a ton a year, if I'm correct on that. Might be significantly less than a ton. But if that supply comes on board, we should try to track it. So supply and demand analytics for the gold industry, as well as price trend and seasonality, right? Because you could just jump over to seasonality and say, does oil typically fall during this period of January, February, March? Or would this be contrarian to what's normal? You see? What is versus what should be? Well, I'll tell you what. Check this out. Last year, it fell in the first quarter, and then somewhere around April, May, June, and July, it rallied. So what if it did something similar? Let's say that was normal. Well, you could find that data in the seasonality tab. It's there. I'm not going to do it for you because you can do it whenever you want. But let's say this does repeat and that's normal. So it'd be down till about here, and then it'd start rising again. Well, that's cool. So if we're at 48, 49, 45, 50, and we're down here. I'm going to start looking for the potential change in direction if seasonality tells me to. And then I could be long for 3 months and then short the rest of the year. Oh, well, Wayne, that's smart. Of course it's smart. It's wicked smart. Cool. So right now you'd say, well, if down is normal, like if that's normal, can I highlight that? No. If this period is normal, then it would be totally normal to fall. How fast will it fall? Well, the linear projection shows if the slope continues, then it'll fall that fast with a standard deviation of high and low. Okay, cool. Well, that answers all of that. I know, right? So now, with the power of TRADARS, you have the confidence and conviction to do the trade. And stay in the trade. But you also have the ability to be prepared for a change in trend 90 days before it's even a threat, instead of being afraid of all the time of things like it can go up whenever it wants. Yeah, that's true. It could be improbable. What we want to do is remove the nonsense and the noise and say, okay, it's true. Oil can go north for all kinds of unexpected reasons, but they're basically all black swans. So let's trade reality. Is it realistic to think significantly up from here? No. Okay, we have tepid demand, we have rising supply, and it normally falls this time of year. So what are you afraid of? It might skyrocket. Well, something pretty significant would have to change, something very, very unusual. So are you trading the very, very unusual, or are you just trading good old logic? And of course, if something happens that isn't usual, we would also see that and go, oh God, that's unusual. Versus just being afraid because you don't know. Okay? I don't know how to say it in Latin. If veritas is the truth through knowledge, I don't know what school has sort of like fear from ignorance, fear by ignorance as their school model, right? The series of unfortunate events. What's the one where they yell, beat a dead horse, beat a dead horse? Memento mori. That's right. Memento mori. I got my memento mori ring right here. Right here. I got it for you. Oh, look at that. Memento mori. I'm going to put it on. Memento mori. Yeah. So anyways, look at this data. It's getting awesome. This is probably not going to work. I just changed all the data on this, on the data feed. So it'll work tomorrow. Oh, it did work. Okay. But we're missing 5 and 7. That's funny. I didn't even pull 7. This should be there. That I understand why it's missing. But here's our yield curve. There's a change in the shape of the yield curve. Okay. And notice, and isn't it cool that you can notice these things now? So minute, the detail that you're analyzing. But according to our stats, the yield curve has steepened over the last 30 days. Huh. Nice. Cool. Rolling, rolling, rolling. Rolling, rolling, rolling. Bitcoin's great during the month of January. Did you know that? Seems like you should know that, right? Not sure if I got this hooked up to our new feed. Oh, yeah. Okay, Bitcoin is great this month and even better next month. Here's the year in advance, everybody. Huh. Seems like you should know this stuff if you're going to be a trader. I don't think I'm exaggerating that if you're going to trade Bitcoin, you should have our projection for the entire year right now so you can make decisions. It doesn't mean we're right, but that output is mathematics with dozens and dozens and dozens, if not hundreds of variables. So it's not guess. There's lots of assumptions, but it's all based on data. And it would be somewhat unusual for something different to happen. And that's what you need to be figuring out. If it's not happening, you're like, why isn't it happening? And then you find out there's some other things happening that go into this. But the bottom line, you better load your son's gun. There we go. You have to have a rough idea of what would normally happen. Yeah, the red line is what happened last year. So I'll have to ask Aiden how we want to handle this in the early part of the year, like January. I guess it makes sense, and then by February we'll line up January to Feb. I might want to try to get that weekly so it just does it faster. But the green bars is what Bitcoin has done in the past. Okay. So you're like, Wayne, so you're saying maybe I could just buy Bitcoin in June and walk away? Yeah. That would be historically accurate. Or what if Bitcoin in April, May, and June was rallying and we're on our way to 150,000 of Bitcoin? That would be extraordinarily unusual. So you're like, okay, well, that's not normal. So what is making the flow of capital move to Bitcoin? Well, if the dollar was tanking because of a threat here, like Trump replaces Jay Powell with a puppet. I'm literally thinking a hand puppet. I'm not Trump. Like, I can see you behind the puppet. Donald, I can see you. You're like, but I'm not doing. I'm the new Fed chair, and we're going to cut interest rates. You're like, oh my God, the dollar's going to zero. Yeah, Bitcoin would go to the moon. But that would tell you, like, oh, well, there is something unusual happening, and you should figure it out and then trade that, not the historic of what has happened in the past, but trade the reality of what's happening now. But if you can't tell the difference between reality and the past, right? I don't know. We earlier today we're talking about 3 and 4 dimensional universes. Another way of looking at it is you're an ant on a piece of paper that's folded into a circle, rolled into a circle, and you're just going around and around and around, and it seems to you that your universe is infinite. It goes on forever because as an ant, you just keep walking and walking and walking and walking, and there's no end to it. Well, somebody in a different realm can tell, oh my God, well, there's a shape to your universe and it's circular. It's not infinitely wide, it's finitely circle. There's a radius, there's a circumference, right? And so if you don't be the ant where you can't even perceive it. If you're going to make next level decisions as an investor, you need to be able to see these multi-dimensions, historic norms versus current reality. Most of the time they're lined up. Some of the time they don't. But if you don't know what's normal, then okay. Thinking of a good answer. You're standing somewhere on Earth, but you have no idea where you are, nor do you have the ability to figure it out. You have no map, you have no compass, you have no GPS, but even if you had them, you don't know how to read a map, you don't know how to read GPS, you don't know how to use a compass. It's all hopeless. You don't know how to use the sun for direction. You're just somewhere random on Earth, and that's that. So you're starting random, and then you say, "I don't like it here. I want to move to Thailand." Oh, good question, or good idea. Where in Thailand? Phuket. Great. Off you go. Will you ever randomly walk and find Phuket, Thailand, from your random spot on Earth? No. I think it's going to be absolutely, totally impossible. There's no way you're going to you could be in Alaska, you can be in Antarctica, you could be in Panama, the great Panama, right? I'm going to take over Panama. So, you got to have good data, my friend, if you're going to make a wicked, awesome investment decision. Especially if you're developing more of an investment philosophy like a portfolio manager. Oh, which reminds me, CIA, we need to meet. The Council of Investment Advisors are going to meet today at noon, so I really should wrap this up and get ready for that meeting. But if you're ever going to build a portfolio, one of the things that's in my mind, like, is this subpoena on the Fed? I mean, I don't get surprised very often, but that is shocking even to me. I'm like, what? And there's been a few other things that's happened over the last 5 years, let's say, by the United States, but by others. And I already talked about this morning, so I won't repeat myself. But it brings you to a what if scenario. And that's what portfolio construction and management is. You, lining up long-term views and then investing properly and then hedging threats to that thesis. But what if now the dollar is demised? I'm not saying it is. And lots of people have been predicting this for 25 years. There's books and books. You could probably buy 1,000 books over the last 25 years that talk about the end of the dollar. Well, it's still here, my friend. It's still a reserve currency. But this is another shocking scenario. So what if we're more likely to have that come true? Is there an opportunity here to build a portfolio around continuously weakening dollar? And if so, when do those moves typically happen? Because that'll help you time when to start building that positioning. When is it historically under threat? So you know when to hedge. And what assets should you be investing in if you were going to dump the dollar, let's say? Again, I'm not suggesting this, but I'm trying to teach you to think ahead and use the data, right, to make big boy and girl decisions, right? Do you buy gold? Do you buy Bitcoin? Do you buy treasuries? Do you buy, dare I say, exotic currencies? Imagine every third world country with dollar debt is getting their debt reduced every day in terms of dollars, because their debt is in terms of dollars. But if you can buy a dollar for cheap and cheaper and cheaper and cheaper, then the debt itself is getting cheaper and cheaper and cheaper and cheaper. So South Africa gets a bailout, Argentina gets a bailout, Turkey gets a bailout, just simply by the dollar weakening. Cool. Maybe you might want to own those things under those circumstances. I don't know. The thing is, you need to think about it and then do the research and all that kind of stuff. And this analytical platform of ours helps you do all of that. And then you can get to the technicals, which I was saying before. It's fairly straightforward. Okay, USD yen. Let me explain this to you, this is working great. We updated all of this over the weekend as well. So over here, Aiden's bias. Okay, that's our AI bias. 60% of that decision is based on macroeconomic variables. Dozens and dozens and dozens of things that have nothing to do with this chart. The other 40% is this chart, but on multiple times. You're like, wait, that's complicated. You think? Yeah. But Aiden's bullish. That's all look, we explain everything, but it's bullish. Is it, we were looking at this one. This is bullish. Okay, great. But it's not necessarily bullish right now. Longer term versus shorter term. 21 is above the 55, so it's bullish, right? Come on. Yes, 21 is above 55, but it's not bullish. Why? Technical setup. It's neutral. Because price is broken below the 21.55. Oh, snap! That's smart. Okay. Now, Aiden's bias, euro dollar, bearish, long-term fundamentals. Well, something just happened over the weekend, and it hasn't impacted the fundamental. It's only impacted sentiment, meaning subpoenas went out to the Fed. Fed's under threat. The market is freaking out. It's not macro. It's not fundamental. But Aiden's smart enough to go, well, that chart ain't bearish, but Aiden's bearish. Aiden's doing the chart, right? So Aiden's like, look, we're basically fundamentally bearish here, but this chart's bullish. Now, for those who bought it, check it out. We've already hit or gotten close to hitting the daily target. So that's important for bulls to take profit because they may be short-term long, but that might be interesting to long-term bears because that's where the bulls exit, and maybe we start rolling this over. Are we going to pull it up on commodities? Come on. Looks like it's trying. It's doing the calculations. I can see the cards, but they're not loading. Come on, commodities. Well, where they're loading, this is just day trading. What's happening today? Swing trading is what's happening this week. Position trading is what is happening this month. Maybe it's day trading. I think it's commodities that are having a problem. Let me try to load commodities on swing trading. Should be loading by now. No, I think it's commodities. All right, so I got to tighten up the back end here. Whatever's glitching out the front end is clogging things up. So I'll get that fixed probably today, but certainly over the next couple of days. So I was going to bail, but I gotta cover silver for hope. Here you go, Hope. All right, let's do, I guess I can just change XAU to XAG. XAU, XAG. XA together happily. All right, let's talk fundamentals. Monitor says, hey, could it actually trade for you? What would the actual percentage based on the recommendation? First of all, it doesn't recommend, it only knows. Okay, but I know you're right. So let me get to that answer. The answer is probably, and I'm tracking that now. What you don't want to do is back testing. Let me go back in the world. Let me go back in history knowing what I know. Well, you know the future, so you can't trade the past. Okay? But what you're trying to say is, you know, because you're asking me like, hey, Wayne, your signals, what's the winning percentage? Well, they're not signals. They're just facts. It's trending up. That's it. It's not predicting it's trending up. But if you're selling something that's hardcore long on 3 time frames without a hardcore rational reason, then you're just a lunatic. You have to have the data. Okay, so 90% of this is not prediction. Now, the AI is able to do relational stuff. So again, let's say if gold is going up, silver's going up. If silver's going up, the stock market's going up. If the stock market's going up, the dollar's going down. If dollar's going down, okay, you see? Now, if I ran correlation coefficients on those, which we do, I could tell you how similar or dissimilar those moves are relative to each other. Now, our whole large language model is based on this relational mathematics, not just some random mathematics, not just the math that you learned in school. Relational mathematics and computations. So it would not just be able to calculate how much gold is or silver is changed today, but it's looking at 100 other assets and looking at how much they are changing in similar ways or dissimilar ways or no similar ways, and tracking that over time to tell you, well, 82% up. If this is up, that is up. 62% that one, 48% that one, so don't worry about it. It's not likely. And be able to just tell you all of this, monitor, with no guessing. It's only fact. So it's not like, what percentage of the time is it right? Like all the frickin' time. But what we don't know is, where is gold or silver going to go? How far is it going to go? We can try to understand who's buying it and why they're buying it. And we can understand price action, and we can do statistical analysis and linear regression and standard deviation. And we can do all that. And once again, it becomes fact. But what you don't know and what I don't know is where it's going to be in 5 days or 5 hours. We have lots of tools to understand probability and likelihood and past performance, but what we don't actually know is where it's going to be in 5 hours, 5 days, 5 weeks. We can tell you where it could be or should be or might be without guessing, but where it will be, well, none of us know. But I do understand what you're saying. And so what I have built in the back end is the idea of, let's figure the question out. If we were going to take trades based on the rules of engagement I have given Aiden, for example, let me shock you. If it's an uptrend, buy a dip. If it's a downtrend, sell a rip. And we can define all of that by standard deviation, slope of the means, linear regressions, moving averages, price action, pivot points, MACD. We do all of this. So it's just like I can teach you how to trade. I taught Aiden how to trade. Great. So we can start, and we have started to track this and calculate it. And monitor, instead of signing up for a free account or let's say $100 account, if I can prove to you that we're 86% accurate, the price is going to go up to $10,000 a month. Yeah, baby, yeah. All right. So do we still have hope here? Have we lost hope? You got fed up. She's like, come on, Wayne. I asked for silver an hour ago. Yeah. All right. So let's remove opinion. Let me teach you how I taught Aiden to trade. On this chart, is this chart bullish or bearish? It's bullish. It's not my opinion. Based on last week, what were the best buying prices last week? Because we're basing our buy and sell prices this week based on what happened last week, like implied volatility. Okay, so this is one buying price. This is the second buying price. Now, I lined them up with time, meaning this is a time and this is a time. That wasn't the reason. Okay, I'm only looking at this price and this price. So we have it identified at the beginning of last week, even before last week, the week before, we had this as the buying price and this is a buying price. So on the first minute of last week, we were at there. Then we made a move up and a move down. We hit our secondary, and now we're going here. Cool. So that's what pivot points are doing using implied volatility. Now, you could have also used Fibonacci. You like Fibonacci? Oh, look, same prediction. Because it's a different variation of implied volatility. Whatever, use one, use them all. Elliot, wait, I don't care. Just buy a dip. Come on. Okay, so now let's fast forward you to today. Well, you were supposed to buy here days ago, last week. You didn't know this was bullish last week? Okay, so let's go to this week. So now we're here. What does this tell me? Well, I'm looking at the same chart as you, and guess what? This is our projected high for the week. So I don't know much, but I know I love you. Oh, right on. Oh. So here's the thing. I don't know where silver's going to be in 5 days or 5 weeks. I just know the probability. Now, it's not thinking about the dollar weakness created today by news over the weekend of the Fed being subpoenaed. That may push it higher than normal. Okay, but we're doing technical analysis. It's not thinking about that stuff. Now, I know the next target if you want to incorporate that, but normal price action would say if you get up to this zone of 86.5 to, right, to 88, 86.5 to 88.5. The probability is that based on implied volatility, we're probably near the end of the current up leg. Now, we might be on our way to 100. We're just not likely to do it this week. So bulls up here are going to be the sellers, not bears, bulls. So what does that mean? Well, there's a high probability that we see something like this. Then you start doing technicals again. Okay. And then next week's pivots will move up. And then, so we have up this week, and then a fizzle this week, and then an up next week. And now what we call that is an uptrend. So that's straightforward. What I haven't done, monitor, so now I'm speaking back to monitor again. I don't know if that's going to happen. But my moving averages are correct. My pivot points are correct. My linear regression, my slope of the mean, my standard deviation calculations are 100% accurate. There's no mistake. Okay? Will it lead to profit? Oh, well, I don't know. This is what we're all trying to do. But if you don't know these things, you don't have a chance. You don't have a hope. Because hope knows this stuff. Okay? And so now we have it all in a logical format. Oh, it did load finally. Now we have it in a logical format. So we're looking at the swing trade. Okay, different point of view now. Swing trade for silver. We're currently at 81.63. And check it out. We just came down and tickled the monthly central. And we have the possibility to continue up all the way approaching $100. $100, dude. We're already at all-time high. Good to know, right? Yeah. Well, how do you figure that, Wayne? It's funny. I was going to point to the methodology, but the methodology is not there, and it's supposed to be. I think we have it here and on the day. Okay. WTI. Okay. There's your silver. Here's your high yield. I've forgotten these symbols. What are we tracking here? ZN is 10-year T note. ZC and Z. These must be like 30. No, based on the price. What the heck are these things? Platinum? No. I have to look it up. We're pulling prices on stuff I don't even know. High yield junk bonds. Yeah. What the heck is this? Why don't I know it? Platinum, palladium, 448. Yeah. Anyways, if you guys know, leave a note in the comments below. And I've taken too much of your time. I got to go. Hey, if you're in my Council of Investment Advisors, you know we've grown our account from $50,000 to I think we're just shy of $110,000 right now. And we did it in a couple of years, so congratulations. I think we have about 7,000 in cash, and we're meeting at investorbootcamp.com in 1 hour. So if you're in my CIA, Council of Investment Advisors, we got to put some money to work, or at least talk about it, or at least do our year-end review. And so I'll see you over there. I'll send you an email as well if you're a part of my CIA. And if, for those that are not, if you're asking yourself, wait, Wayne, you went from $50,000 to $110,000? Uh-huh. With real money? Yeah. With a group. You've taught a group how to manage your money and do that kind of performance? Yeah. And lower risk. Wait, is this phony, funny money out of a broker somewhere, or is it like a legitimate firm? Oh, no, it's in a Wall Street major bank. Big, well-named bank. Legit. Wow. Yeah, so I lead a group that invests my money, and we're rocking it. And we've been rocking it for years. Wait, it sounds like you're bragging. Oh, you think? Dude, it kicks ass. Yeah, I'm not bragging. I'm flexing. People are talking about it, but other people are doing it. And we're doing it, and we're doing it good. So, gotta go. Peace on earth. May the pips be with you. May your profits be above average. And thank you, Traders Way. Thank you for your wonderful execution.